The strategy that I'm about to teach you not only makes it impossible for you to lose, but it's also stupid simple. So last video we did the whole month of January, and this one we're gonna do February and a bit of March, all recent price action, so you know this actually works. Watch until the end because I'm gonna give you the checklist for the strategy. So February starts off here. We know that we have a liquidity to the upside and a liquidity to the downside. So we know we must go to the red line due to how close we actually are. If you want to be a bit risky, we do sweep this liquidity right here. So as soon as market open, you can try to get some shorts. Keep in mind that it's risky due to how close it is to the red liquidity, which we're actually about to target. You get the shorts until the inducement, fake structure coming to the initial order block, which I don't tend to like. Liquidity sweeps are way better. But the main component here is the fact that it's London close timing. So because New York was bearish, London close will tend to be a retracement of the day. And you actually got that, the 3R. And as you follow to the next day, you have Asia being sweep as the inducement of this overall structure. We sweep it, it's London close, and as New York was bearish, I was trying to intercept London close to be bullish again, but this trade would actually be a break even or even a loss as price comes back down. I know the red line will still be swept. All of this is just building more liquidity towards it, right? So as we go into the next day, we know that we have New York lows being swept, that this now becomes sort of an inducement. You have this liquidity, you have the red line, and you have this one. You wait for one to get taken. Asia took it, so the timing isn't good, and all the day continues to go up. We don't trade it unless we're in London close or New York open. As we sweep it, you may look for shorts, but then price doesn't stop, just continues to go upward. So you go into the next day, and what you see is that, well, if it doesn't want to go down or make another liquidity sweep to the upside, you just simply look for longs. As we sweeping London session, we coming to the EPA of the last major structure that was a liquidity sweep. Now this liquidity sweep becomes efficiency. We tap it, and right now we can look for longs. And this is where the beauty of the strategy comes in, where you're having ping pong trades like this. You have internal liquidity sweeps to go for more comfortable major ones, to then have the safe positionings, the risk positioning until the liquidity, and then the safe one following that, making it a ping pong vision. So then on the next day, you got the liquidity sweep, the market's open, you have this liquidity now, that was your stop loss that has become the previous daily low, and on the following days, we're lucky to not being tagged out, but eventually we got it. On the high time frames, we swept the highs, right? As we sweep some highs, we gotta sweep some lows next. So what we have underneath, well, we have some trend lines over here, but also all of this, as also this major liquidity. So we're overall bearish, and that's why we're only gonna look for shorts afterwards. But price is fractal, and you can still look for retracements. And in this case, you know that we have this structure right here. Price went down, it went slightly up, continues to go down. This high didn't take no liquidity, it isn't protected, so you mark it as a liquidity to be taken. And as the day opens, we can see that on the open, there's a massive rejection right after we sweep London session, so you may look for longs just to go from one internal liquidity to another. Like the previous example right here, this first one becomes a risky trade, and then this one becomes a valid trade. Liquidity sweep, New York open. This becomes super simple, super good for the ICT traders, SMC traders, smart money trap right here. From one liquidity to another. That's super important to know. You go from one liquidity to another every single time in the market. This is not only applicable to US 30, it's also applicable to other pairs, to other domains, Forex, stocks, everything. And in here, perhaps you could have gotten a stop loss because price did some straps. It eventually goes up, right? Because in here there was London close, and as New York was bearish, we were trying to retrace all of this downwards move that was made, right? This clearly becomes a smart money trap, not only due to how basic it is because price just flushes from here, but also because, well, this is making equal highs with this, that is making equal highs with this. So you basically have three previous daily highs. Not only previous daily high is a big liquidity, but you have three altogether that are also in inducement of the strategy. So if this high is protected, right, we're gonna come to test it, but also sweep all of these previous daily highs. And as we sweep it all on market open, well, pretty fucking simple. Because this was a trap, this would have become a trap, as it's also pretty much equal lows right here. So you can see how flawed the SMC trading actually is as well, because they think they're smarter than support resistance traders, but then they're positioning their order blocks in highs and lows. They have equal highs and equal lows in them. So it makes no sense in their own ideology. You can extend it. Previous daily low gets swept. Perhaps you could have gotten some buys here. Perhaps talked out break even or even a stop loss. Massive gap down here since it was the weekend, and it was actually the weekend that Trump attacked Iran, I believe. New York session opens around here, not making any liquidity sweeps, right? Because you come into this day and you would have, well, this inducement right here, this liquidity right here, and this liquidity underneath right here. But we do sweep it in London close session. And the most powerful concept about London close session, it's this bias confirmation. So you'd have London being bullish, New York being bullish. That means London close will be a retracement of the day, meaning bearish, and goes to sweep that liquidity. And as we sweep the previous daily low, in the next day, you don't trade it on London, otherwise you will get trapped. You trade it on the market open. Once New York also sweeps London, making the London a smart money trap, and then this a smart money trap. If this zone from the previous day is protected, then you look for a humble 3 right here. And on the next day, you perhaps got a stop loss right here, as we do reject from a liquidity sweep that was the previous daily high. But then, as we do a trap, because sometimes we do traps on London close, you know that we have New York being bullish, London being bullish as well, New York, London close, sorry, retracement of the day, and you have this beautiful zone that clearly looks like a smart money trap for the SMC traders, and you also have the inducement that it's Asia low, but overall the previous daily low and our overall higher time frame bias that tells us we're bearish. And guess what? As we target our liquidity, we may look for buys now, because we use liquidities to position ourselves to then target liquidities, and as soon as we reach those liquidities, then we can trade it again. It's a whole cycle. And once you see the liquidities, you always check for the timing, whether it's open or London close. And you can see by my indicator, this salmon kill zone bar, it's London close. So New York was bearish, London close might be a retracement. It doesn't go too far, so you don't target the moon, because we're overall bearish, like I just said. And as you continue to go down, you can see that the major liquidity is right here. So you have the inducement, right? The overall zone on the left is still protected, let's say. You have that. You can look for some internal buys, since we're sweeping Asia lows on open, to then go look for the highs. So as this was a trap, this later will become a trap. We sweep the liquidity, London close once again. If it's London close, then you can look for the retracement of the day. The day was overall bullish, so New York London close will be mostly bearish. We come into the next day, we're still in the position. Your previous stop loss from the other trades, which you already got tagged out TP, becomes a previous daily low. And if this is a previous daily low and it's super close to it, well, we might as well just take it, because price will be a magnet towards these type of major liquidities. If you wanted to be greedy, you could even target the higher time frame liquidity. If you go towards the left, well, you can see that this inducement, right, this kind of fake structure right here that didn't take no sort of liquidity, starts building up multiple equal highs that are also previous daily highs. And as soon as we take them in New York Open, you already know by now that this is pretty fucking simple. You see some liquidity sweep, you look for the reversal, and you look to short it to go not only to this liquidity, but the major one that's on the higher time frame. The checklist is simple. For one, you must see a liquidity sweep, right? You already know it's all about liquidity. Liquidity is what moves the market. We're coming from liquidity to liquidity. Second one is timing, of course, right? You can have two identical charts, but if one is in Asia and the other one is in New York, they tell a completely different story. So you will see that every single time we're doing the liquidity sweeps and positioning ourselves is always either in New York session or still in London close, which is still New York session, but just the afternoon of New York. A bit less relevant and slower in terms of movement, but still super good to trade, as you guys know. So if it's New York session, then you look for a liquidity sweep. If it's London close, you look for a liquidity sweep, and you have that confirmation bias that London close tends to be a retracement of the day. So we'll retrace the overall day. I'm giving you incredible sauce right here. It sounds simple, but if you can get over the fact that there's no special effects and the views for this video are low, I guarantee you that you know more than 95% of people that are trading. And for the third one, well, it will be direction. You gotta make sure that it's confluent to the price to go there, okay? It's not just about seeing a liquidity sweep. Okay, we had a liquidity sweep, but is there any reason for price to come lower, to go to another liquidity? Okay, in here, we swept some liquidity to the upside. Well, is there any reason to go to the downside? Well, we have the higher time frame liquidity that tells us we're overall bearish, and we have this liquidity right here, because this was a trap, this would have become a trap. Pretty simple. You can see that London bounces from it. That's just to incentivize more people to come into it, and then we sweep it again. And of course, there's a bit more confluences of strategy. There's a bit more specifics and ways to enter right here that we didn't go over. But if that would have been the case, that the video would be 3 hours, 5 hours long. And some of you guys are complete beginners. Some of you guys are already intermediate traders who basically have been seeing my channel and know about this stuff. So I didn't go too much in depth. If you want to, there's 3-hour videos, 5-hour videos, free courses in my channel. You can go check them in the description. And on that note, I'll see you guys on the next one.